We just heard from the congressional leaders, Mr. Hoyer and Mr. Shadegg. Now I want to get a reaction on what it might mean for the economy and the stock market. Joining me now, two regular contributors, Gary Gensler, former Treasury Undersecretary to President Clinton, and Don Luskin, Chief Investment Officer at Trend Macro. Don Luskin, you heard what you heard, but what did you really hear? What's the impact in your mind as an investor and an advisor?
This is all a game of good cop, bad cop. On the Democratic side, you've got the bad cop. You've got Dingell out there with what you correctly called an anti-business tirade. Then you get Steny Hoyer making nice. And the Republicans are the same way. You know, Bush was very conciliatory in his press conference yesterday, and John Shadegg, I thought, was very, very strong about saying we're going to stand up for our principles. So it's just all about positioning. And you know how it's going to all end up? It's going to end up nowhere, because we could hardly get anything done when the Republicans controlled both houses of Congress and the White House. So how's anything going to get done with divided government? So this is all, I think, kind of a tempest in a teapot, and 3 or 4 months from now, it's just going to settle out.
Now, Don, are you still in the camp that says growth will not be damaged by this new Democratic Congress?
I don't think it will, because on the Democratic side, you've got this influx of blue dogs who are moving the Democrats toward growth. And if you look at what happened on the Republican side, the Republicans got moved toward growth too. There are 8 freshman congressmen who were sponsored by the Club for Growth, which is the leading lobbying organization for limited government, low taxes, less government spending. Of those 8 Club for Growth sponsored freshmen, 7 won. So we've got a whole new pro-growth constituency on both sides. So it's going to be very hard for a radical leadership like Nancy Pelosi to keep up the angry left anti-growth rhetoric. It's not going to wash. I hope you guys both heard the statement that was made to a Reuters reporter today by an official of the People's Bank of China, who was talking about diversifying the trillion-dollar account of holdings in U.S. dollar assets held by the People's Bank of China. And the hint was that's going to be diversified out of dollars into some other currency. Now, that is a message to the new government in the United States. That's a message to Nancy Pelosi and a message to John Dingell and to all the protectionists out there that don't mess with this nice globalization deal that we've got. We're helping China grow. They're helping to fund our capital markets. It's been a wonderful deal, and China is saying, you mess it up, Ms. Pelosi, we'll mess it up.
Don, is that why gold went up 20 bucks today?
Yep, that's why gold went up. It's why the dollar went down. It's why oil went up. It's why stocks went down. It's big news.
Don Luskin, you're still a stock market bull. I want to get all this square on the table.
Yeah, I am. I think if there's any kind of big negative reaction to the Democratic sweep, I think it's a buying opportunity. It's our unelected officials at the Fed. Those are the ones who are the threat to growth.
All right, okay. One of the Achilles heels, as it turns out, the exit polls showed that voters who favor limited government really went over to the Democratic side in this election. Yep. Republicans really had their bacon stolen from them.
That's right.
What does that mean? How do you correct that? And is this going to go into 2008?
Well, it's like Dick Armey said in the Wall Street Journal today. Look what Democrats had to do to get elected. They had to act like Republicans. And look what Republicans have done since they've gotten elected. They got in office and acted like Democrats.
Don, I think the Democrats acted like Democrats. In the 1990s, we certainly were into spending control under the Clinton administration.
No, yeah, well, you had a Republican Congress. John Sylvia, Gary Gensler, and Don Luskin, thank you ever so much.
Thank you, Larry.